Welcome back. Hope you're having a good morning where it appears to be a rough ride that awaits us. Yesterday we ended a little bit lower. Today we're likely to start off in the green, but it's expiry, so things could get rather volatile. Well, it's a good time to get a chat going on the markets as well as fundamentals as well. We have Aditya Suresh, the head India Research and Strategy at Macquarie, who joins us on the show. Hi Aditya, good to speak to you after a while. Well, the last time we chatted, you said 2023 could be a bit of a down year for the Indian markets, and it seems we're in a bit of a tizzy. Yields are going higher. The fear is that Fed will keep rates higher for longer. And valuation-wise, we're not cheap. What's your sense from here on? I mean, 2023, what kind of a downside does it open up?
No, thank you for having me on the show. I still would maintain the view, quite frankly. So we still see downside here to whether it be earnings growth, and that therefore kind of leads to kind of a lower kind of outcome here for markets. So if I kind of just lay it up a little bit, so if I think about markets as three pillars: earnings growth, foreign flows, domestic flows, even kind of excluding the valuation piece, earnings growth has high numbers still baked in, and there is downside here to kind of work through still. Foreign flows remains anemic. Domestic flows incrementally, I think that could be a challenge given kind of higher rates. And so on a say over the next 12 months, we still are more cautiously positioned on Indian equities.
Okay, cautiously positioned on Indian equities. That's interesting. Aditya, good morning and thanks for joining in. What do you do with banks? A, what is ailing banks? I mean, the bank nifty is down almost 10% from its highs last year. And B, is this a good time to be buying some of the, retail-oriented private sector banks? Or do you think one can get better levels in the months to come?
So I think banks is an area where we are selectively positioned. In terms of the data in itself and earnings estimates, there is going to be still strong growth, which we at least forecast. So we're sticking with the larger kind of private banks. I think what's really happened so far this year, and I think this is broadly a reflection for what's happening in markets as well, is that expectations have been high. Positioning has been high, expectations have been high, and simply meeting expectations does not really give you outperformance, right? So I think it's more that it's more a reflection of that. Plus, there's a view that like to the extent we have margin compression that not being kind of fully baked in. Probably that's kind of playing itself in the bank stocks, but I think the main theme there is about expectations being full to start with.
Aditya, hi. Good morning. So, at what point will some of these excesses correct? I mean, I'm trying to put a numerical, quantitative sort of estimate to this at an index level, for example. Is it another 5, 7%, 10%, 15%? By when will it become more attractive? Go on.
Yeah, no, so from a MSCI India perspective, what we had kind of called for at the start of the year was a 10 to 15% pullback for 2023. We're down about 6%. So I still think there's about 8 to 10% to go before broader markets become attractive. Against that backdrop, Prashant, I think that there's still areas of interest, right? So, but a broader kind of market in itself, we still expect some pullback here.
All right. But a couple of other names, Aditya, that y'all both fairly positive on. I think HCL Tech from the tech space, from the two-wheeler space, I think TVS Motors is something that you like. So if there is a correction, there'll be good entry opportunities, right? Give us a couple of themes that you like.
So I think themes in itself, for example, in the IT space, one of the areas where we've been a bit more anti-consensus kind of positive has been that we think that the cuts to margin are done, margins are bottomed, and actually we see some margin expansion here, which is yet to be kind of reflected fully in estimates. We still, again, one comment is about earnings, the other comment is about kind of is this priced in? Because we like the industrials, we like kind of the credit growth kind of upcycle story with the banks as well. But it still comes back to the bottom up and kind of is this priced into the stocks. So if I can leave you with kind of where we see the best kind of earnings growth, if I may, that still would be the banks at the margin. I think our consensus to kind of conservative here on the IT names. Industrial selectively we still like.
Okay, so you're saying you like industrials, you still prefer banks despite the fall, and on IT you're on the fence, is it?
Now, IT at the margin, so we are positive on IT.
Okay,
we are above consensus on both margin and revenues.
Okay. All right. We'll leave it at that. Aditya, thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your thoughts. Well, let's move on and get you the first corporate on our radar today. Aarti Industries is what we're